Hello and welcome to myfinanceteacher.org. Let's talk about gold again and gold cycles and see what they promise. Generally, gold follows half-a-year cycles, as you can see on this chart that goes back a couple of years, slightly more than a couple of years. We count cycles from a low to the low. So here is one example of a cycle with its growth stage, with the price growth stage indicated by this arrow. Let me make the arrows more pronounced. And the price decline stage indicated by this arrow, and all of these cycles as well. So generally they all last for about half a year or so. And the last cycle has been rather tricky in its price decline stage. Here in October, I actually thought that we had started a new cycle. However, I think now we have finally reached the bottom or the low of this cycle and have started the new cycle that promises to bring a nice price growth. So in relation to this price growth, I would like to look at a couple of other things as well. One of those is the US dollar, the strength of the US dollar compared to other currencies. This is the chart of US dollar index. And generally US dollar seems to follow around the year-long cycles, something like that. And we have been at the price growth stage of this last cycle for more than half a year already, since about May last year. So it is time for the cycle to turn into its price decline stage, and we might have already started that with these last 2 weeks, when the value of the dollar has been decreasing. By the way, this is a weekly chart, so each of these candles represents a week, and this goes back 3 years or so. So if the dollar is going to decrease in value, that is going to help gold increase in its value, denominated in US dollars. So that's one notion that supports a promising increase in the gold price. Another notion is what is happening with interest rates and US government bonds. Here's a chart of US government bonds that goes back more than 10 years already. And we see that bonds also oscillate with increases and decreases in price. One thing to notice here is that bond prices are inversely related to interest rates. Whenever interest rates increase, bond prices decrease, and vice versa. So we have recently experienced quite a big decline in the bond price, corresponding to an increase in interest rates, and over the last couple of weeks that decline seems to have stopped. However, in my opinion, there is a chance that the decline is going to continue. You would ask why, since we have had declines of similar sizes in the past, which all have morphed into an increase, a subsequent increase in bond price. But remember that over the last many years already, since the global financial crisis, interest rates have only been decreasing, which helped to generally give the bonds an upward trend. Now, if interest rates are to gradually increase, as is promised by the Fed, the central bank in US, this uptrend in government bonds might be broken. If that happens, a lot of investors are going to flee away from bonds, and one of the assets that they're likely to flee into is gold. So with all of these promising developments, what are the expectations for this increase in the gold price? Well, over the last 3 years, the intermediate cycles brought on average a 12% or 13% increase in gold price. This time I expect the price to increase by considerably more than that, for the reasons that I have mentioned. Say if gold price increases by around 12% from the current level, that will bring us to about $1,400 per ounce. So I hope that has been interesting for you. And one thing I forgot to mention is how long it's going to take us to get to the level of around $1,400 per ounce, or maybe more, or maybe higher. I guess it's going to take around 3 months or so. That's a possibility. That will bring us past the Chinese New Year. So as I said, I hope it has been interesting for you, and good luck.